Let's take a look at how the stock market is doing. And the Dow Jones Industrial Average is down 70 points. The Nasdaq also down, and the S&P 500 is down 11 points. And joining us this morning to talk about what's been happening on Wall Street and more on our economy after Wall Street enjoyed a really good week and enjoyed a rally this week is Sumner LaCroix from the University of Hawaii Economic Research Organization. Good morning, Sumner, and thank you so much for joining us.
Good morning, Maha.
So we saw a rally this week for stocks, but last week investors practically had a heart attack when stocks plunged. So what's going on and what happened this week?
Well, I think there's just a little bit of good news that investors are pricing into the stock market. One is people are taking a look at the decline in U.S. interest rates that's happened over the last 2 months. U.S. interest rates have declined by over 1.25 points over the period August to September. That's a tremendous decline. That means that most homeowners could refinance off that 1.25 points. As long as their home mortgage is in good shape, it's a great opportunity to refinance. It also means lower borrowing costs for firms. This is something that could well push up firm profits and push up the stock market. But weirdly enough, the market has also, I think, been acting on rumors. There have been rumors coming out of the IMF meetings that were held in Washington, D.C. last weekend, the International Monetary Fund meetings, that a plan was coming forth to resolve the Greek debt crisis. And the Greek debt crisis has been the big event that's been hanging over world financial markets and causing lots of uncertainty and been raising worries about a global financial crisis.
Right. So what's happening in Greece is definitely tied to what's happening here in the U.S. If you can put your professor hat on now and give us a little one-on-one explanation on what exactly is the Greek debt crisis and why is it affecting things here in the United States? Because Greece is not exactly a world superpower.
You know, Greece is a small country, but it's embedded into the European Union. And it's a small part of the European Union that's going bad. This would be as if one of the U.S. states was having such a severe financial crisis and was in such bad shape that we were thinking about expelling it from the Union. Okay, so Greece basically borrowed during a really prosperous decade of the 2000s. It just went on a borrowing binge. It expanded its social programs. It did a lot of worthwhile things. And then when the crunch came in 2008, 2009, when the world moved into recession, Greece basically couldn't pay on its debt. There have been these bailout programs that have come from other European countries to help Greece pay, but the problem has gotten worse. The bailouts haven't helped, and now Greece is talking about the possibility of default. If Greece defaults, there's lots of European banks that are exposed to Greek debt. If European banks go bad, we could be heading toward a second big world financial crisis. You know, and then there's a simple thing to do there: fasten your seatbelt.
Right. So if things are stabilized in Europe, will that definitely help revive the U.S. economy?
That would help revive the U.S. economy, and there's basically two reasons. One is Europe is one of our biggest customers. If the Europeans aren't consuming, a lot of our firms aren't selling. There's a second reason, too, is that if the debt crisis is resolved, or at least partially resolved, then what we're likely to see is less uncertainty in financial markets. Investors don't like uncertainty. Once we get less uncertainty, we're likely to see more investment, and that's a big driver of the economy. All
right. Well, we'll definitely keep an eye on it. Sumner LaCroix, thanks for making it easy for us to understand. We really appreciate your reports every Friday.
Thanks a lot, Maha.
And we'll see you then. And don't forget, if you'd like to see this UHERO report again, you can go over to the morning section of our website, KITV.com. It is 6:38. We'll be right back.